Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. So gold makes us to wait not too long when the pullback will start, as we talked about in the weekly report. That's, well, background is really very good on the gold market in its long-term perspective pattern. In short-term, tactically, market is a bit overextended. It needs to get some pullback, some relief after the significant rally that we have. Currently, market has taken out the long-term top around 1920, so you could see it on the monthly chart. If you remember, in the weekly report, we have discussed the monthly target that potentially for us stands in 2077 and COP. And here, let's take a look. Market has taken out the previous top of 1920. So that's important. And now when you take a look at the reaction that will happen around this area. Currently, guys, this reaction looks mostly as the wash and rinse, especially on the 4-hour time frame chart, and that gives us more confidence that maybe indeed we will get some moderate pullback. Maybe it will not be very significant, but at least for $100 per contract, maybe greater, we still could get the pullback. On the daily chart, we're considering the same trading step that we discussed in the weekly report. So we're watching, as on the euro, for harmonic swings by far, because currently we do not know yet what the shape will be of the retracement, whether it will be A, B, C, D, or maybe some pattern will be formed, something of that sort. That's why currently we're following just the harmonic swing that forms here. You can see it repeats very accurately on the gold market, so you could find it here as well, and earlier it also has been repeated. Now I'm not taking in consideration two harmonic swings it was here, but first, as the overall trend is very strong, let's focus first on this minor pullback. This harmonic swing points and makes an agreement almost with the 1862, 1865 area. This is confidence support on the daily, and as we agreed on the weekly report, that recent action is not bad thrust actually, especially with this recent acceleration to the upside, right? So on the way up, we do not have any close below the 3x3 except maybe this moment. These two closing here was in the beginning of the thrust. But later here you could see no close when this minor was, but it was not just even the 30% retracement. So overall thrust looks not bad. Also, well guys, if we'll start this thrust and levels not from these lows but from that lows, you will see that we will have these levels slightly higher, and that makes the total agreement better match to harmonic swing. So that's the area that we could consider potentially for taking the long position. Not in perspective of the long term, but as a pullback here could happen because overall momentum is very strong, and that's the first retracement down. It will be significant retracement after that, deep pullback as the first leg down will be over. And that's what we will be watching for. On the 4-hour time frame chart, we have actually the same stop of the minor scale. So take a look at here is great stop for the bread and butter trade, as we discussed in the weekly report as well. This is minor part of the daily thrust, it's most active part of this thrust. Here is the great bearish engulfing pattern. That makes me think that we have the wash and rinse as a typical price behavior for the wash and rinse action. And market collapsed directly to the 30% support. So that's the bread and butter in place. The minimum target of this will be the 618 pullback, right back up. So it's approximately for $30-$35 per contract. It's not bad potential for intraday trade. And after that, we will see what will happen. So currently the retracement that we are waiting for is starting. Now we just need correctly to catch the potential destination point of this retracement.